Welcome to The Real Money Show, the number 18778 Silver, the website, guildhallwealth.com, to get physical gold and silver in your portfolio. Buy it direct, hold it in a vault for secure, segregated, allocated storage, ability to buy and sell on a phone call, and get your serial numbers, be able to go and visit your product. As we say, if you can't hold it, you don't own it. And with a depository account, you can do exactly that. And of course, at Guildhall, we offer the ability for clients to hold physical gold and silver in a registered account that is unencumbered. You own it. Get the serial numbers. Again, go to the vault, personally audit your holdings. Feel that bar in your hand, right, Jerry?
Have at it. This is exactly what we're doing. We're helping to build your gold and silver reserves. We're talking about outside the fractional reserve banking system. We are aiming, and we aim to educate and inspire those who prioritize real wealth. You work very hard. You may be stewarding wealth for, generations to come. And it's all about measuring in ounces, not depreciating fiat currencies. And we hope to foster this community with you, and that values financial resilience, independence, and most importantly, freedoms.
And speaking of devaluing fiat currencies, this week it now takes 3,000 fiat US dollars to buy an ounce of gold. It has continued to lose value against the millennia-aged product of physical gold and silver. That's right, we smashed through the $3,000 barrier. Silver's also picking up steam. And, Jerry, I want to talk about that right out the gate. Obviously, we also want to get into other things that are happening. The Comex is taking away certain products right at a very strange time in the market. We've got some big news in terms of legislation out of Utah in the United States. And what is going on with the PSLV? There's some weird things going on there. So it's kind of a twilight zone time in the market. But the good news, the really good news is gold cracked $3,000. And I have to tell you, I felt the immediate psychological impact. When we were trading at 2,700, which was only back in December and January, 3,000 was still this sort of far off away number, something that had to be cracked. It was almost an academic thing. Now that we've passed 3,000, it's like, yeah, who cares about 3,300? Remember, we were making calls. Well, this bank says 3,300. Oh, this bank says 35. No, forget that. We're already getting calls for 4,000, and there seems to be, Jerry, a belief in $4,000. Mm-hmm. Jeffrey Gundlach. Now, this was before gold made its new break at all-time high, which, by the way, you should get used to, because every time it moves up $1 over 3,050 now, which we got to this week, it's just going to continue to be all-time highs.
And the revisions are getting revised daily.
Jeff Gundlach came out, the so-called bond king, and he is calling for the yellow metal to get to $4,000 an ounce. Quote, gold continues its bull market, and we've been talking about really now for a couple years, ever since gold was down at $1,800. He believes it's going to 4,000. He says, I'd be so bold to say I think gold will make it to 4,000. I'm not sure that it'll happen this year, but I feel like that's the measured move anticipated by the long consolidation at around $1,800 on gold. Now, Jerry, that's something you've talked about. This, look, we bottomed out, back in 2016, 17, and if you take those numbers, look at past bull markets, it's pretty easy to see where gold can go. Mm-hmm. I also think gold's revaluing right now, and if you tack on, 15, 20, 25% a year for the next 5 years, you're going to find yourself north of $8,000 an ounce. What do you make of Gundlach's call for 4,000?
Well, revisions are getting revised. We have other, Jeffrey's spot on. It can happen sooner than we know it. All roads are leading to gold. I mean, we're talking about now in the news, golden passports. We have golden dome talks against missiles, drilling for liquid gold. Everything is just this golden age in America. All eyes are on gold. Gold is being repatriated into the United States at a world record pace. Not to mention, and don't even mention, don't put in the headline that silver is actually outpacing gold's importing the imports that are coming into the States. That's a big one for national security and critical mineral resources. But back to gold, 1800 was that base, and once we broke through the 2000 and we were looking higher, the escape velocity, when you break that topside psychological level, if you look, I had to revise my own Fibonacci levels, and I have some levels here to share. If you want to get your pens handy, ladies and gentlemen, we have 3,022 as a 61% support. Then we have 3,053 on the top side. After 3,053, it jumps up to just before 3,100. So watch 3,100 as a ceiling, and once it breaks through 3,100 ceiling USD, the next resistance higher is 3,200. So the acceleration happens quite easily when you have broken through that final resistance line.
The number 18778 silver and the website guildhallwealth.com to learn how to hold physical gold and silver in a registered account. Jerry, has anything changed in the psychology of why people would be wanting to get involved in gold and silver? What are the reasons that the market's moving the way it is, and what are the reasons that's going to see it continue to do so?
Well, the legacy fundamentals are still at play, Jeremy. It's the currency devaluation that is going to continue. Look, the Bank of Canada is ready to continue to cut interest rates. They're going to print EI for everybody if you lost a job because of tariffs, which is inflationary. We have stagflation. The big headline right now, especially after yesterday's Fed meeting, resurrecting the word transitory. That's back. Transitory inflation is back. Low growth, high inflation, low employment. So the fundamentals still remain. So it's going to be your hedge, your wealth insurance, which is the number one reason as you should be looking to preserve against the rising inflation. It's very sad that our government will not tell us the real world inflation. Why don't we just go back to the 1979 method of calculating inflation? It was more honest. It was actually honest. This one is just a farce. It's not 2%. We know inflation is about double digits, maybe 12, 13% if we use the old method of calculation. So therefore, the GICs won't cut it. If you're getting a 4% GIC and your money's losing 15, 12%, well, I'm down in the hole 7% by the end of the year. Thanks, GIC.
Well, I think to your point, yeah, if you're going to lower interest rates, obviously the Fed paused, dovish pause, I think they called it. But if they're pausing, or if there's an intention that the interest rates could be cutting, same thing in Canada, then you lose your motivation to have high, quote unquote, with irony, high interest savings, GICs. And actually, I got a few calls this week with those exact reasons of, hey, listen, I have GICs, and, with interest rates dropping, what's the point? Really, what's the point of having them, especially when you see the moves in gold? And I think the other part of it is going to be volatility. I think that there's a lot of anxiety. There's a lot of people not knowing what's going on, tariffs one day, tariffs not the next, what is happening in the world. There's just a lot of chaos and confusion, it feels like sometimes. And, hopefully we're cutting through that on the Real Money Show. Hopefully we're cutting through. But that kind of confusion and anxiety, look at the stock market this week. It was down on Friday. It's up on Thursday, right? What a wacky week, and gold rides through it. Mm-hmm. So I think that it provides that sort of calm amongst the economic storms that we're seeing. And again, our contention is that we're continuing to see massive revaluations in the gold market. There's a reason why central banks are buying. And I think the retail market is starting to pick up. But let's in the next segment, I want to get into what's happening with the PSLV, the Sprott Physical Silver Trust, because we saw that all of a sudden there were major shorts being put onto this ETF. Why? Why now? Is it because they're expecting, some entities are expecting the price to collapse, right? That's why you would bet short, because you're saying, hey, silver topped out at 34. We think it's going back down to 32 or 31. Let's short. But you wouldn't short the PSLV. We've never really seen that before. So what's going on? We're going to dig into that in the next segment. In the meantime, the number 18778 silver and the website guildhallwealth.com to learn how to hold physical gold and silver in your registered account. That's your RSP, TFSA, Lira, LIF, RIF. And one of the beautiful things about having it in a RIF account or a LIF account, your retirement account, is you can actually withdraw the physical product.
Right out.
It's a bit of a pain, I got to be honest, administratively, but we're happy to do it because it's such a great way to take advantage of this vehicle. You know, you've got whatever you have in there. Let's say $100,000, you're pulling out $5,000. Why not pull out an ounce of gold, right? Maybe you decide you want to give that to the grandkids. Maybe you decide, well, I'm not ready to sell it. So you have that ability to withdraw the physical product and have that in your hand as part of your retirement income. Right? It's a beautiful thing. So it's all about physical, holding the physical. And of course, we try to maintain competitiveness. I think we do a great job of that. We've been doing this with registered accounts since 2016. I think officially we started in 2015, but 2016 proper. So we've been in this game a long time with physical precious metals. And of course, if you've never purchased metals before, acquiring a little bit is a great place to start. Learn the difference of spot price and what it means to buy the retail product, etc. We will show you how to do it. We love talking to clients and walking them through their first acquisition to their 15th acquisition. The number 18778 silver and the website guildhallwealth.com. That's where you're going to go to find out how to hold physical gold and silver in a registered account. Take advantage of the markets of gold and silver on fire. We believe they're going much, much higher. And if you've never owned physical gold and silver, listen to the experts. They're all saying have at least 10, 15% gold and silver in your portfolio. And if you don't own any, having it in a registered account, your retirement account, is the best place to start. So give us a call, 18778 silver and the website guildhallwealth.com.
If you're looking to build a lasting monetary reserve for your future, you must visit the e-store at guildhallpreciousmetals.com for your gold, silver combos, ladies and gentlemen. That's the way to save money. If you're looking to get a little balance with some coins, bars of different sizes at competitive prices, whether you're accumulating or gifting it, we got you covered.
Excellent, excellent. So we were going to get into the PSLV, which we will. But just before, while we were at break, Jerry, we were talking about this new, what is it, a Bitcoin bill?
Act.
The Bitcoin Act. And this is being put forth again by the Senator Loomis. And it's very, very interesting. Tell us a little bit about it, because there's a gold angle to this Bitcoin Reserve Act that we found very curious.
So yesterday, I believe it was March 19th, so we're recording on the 20th, the Bitcoin Act of 2024 was introduced by Congress, and however, it hasn't been enacted in law. But what it is, it's a proposed legislation introduced by Loomis, which is trying to establish a strategic Bitcoin reserve and authorizing the U.S. Treasury to acquire up to 1 million Bitcoins over a 5-year period. And what they will do is utilize what the Treasury can already do, is revalue that gold price from $42 up to $3,000, and that's to use the proceeds, the differential, and buy new Bitcoin, not deal with the debts or anything like that. But we need to buy more Bitcoin. The Bitcoin reserve that was signed by Trump through the executive order, the Bitcoin reserve was to accumulate and acquire Bitcoin, existing Bitcoin, from criminal enterprises, the black market, and things like that. So we'll take over that. But however, this bill
product, by the way, Bitcoin that was seized.
That's seized.
Apparently, you're not allowed to seize, or it can't be seized, but apparently it can.
Apparently it can. But it's important to note that this executive order does not mandate the Treasury to purchase the Bitcoin or using the proceeds from revalued gold reserves. I believe that they're going to revalue the gold reserves for many other reasons, maybe not to purchase more Bitcoin. Such a provision is specific to the proposed Bitcoin Act of 2024, so we're going to keep an eye on that. Again, it's very important to remember that this bill has not been passed into law.
So I think it's interesting just to note that what you have here is a bill that inside of it is essentially saying revalue the gold, sell it, and buy Bitcoin with it. I mean, that just, I'm sorry, but that smacks of desperation. Of we want. Well, it's two things. It's either you're completely blind and you believe there is only one thing. There is only Bitcoin. That's it. That's all that exists in the world. It's taken what was created with gold and it has perfected it in digital form. We no longer need the gold. Fine, you can be ideological if that's how you want to be, or you're trying to push it higher. You know, like you're trying to pump up your book. You want to get rich off of it, and you want to sell the gold to sacrifice the physical gold, which, by the way, they can't do, right? You can't. The only thing that you can sell gold for out of the treasury is to pay off debt.
Correct.
So that ain't going to fly.
That ain't going to fly.
But it's just like, what are you doing? You want to sacrifice gold to buy Bitcoin? Come on, you're looking to push up the price. Someone wants to get rich.
Yeah.
I'm sorry.
So,
like, you know, you don't hear that from gold people saying, you know, you should sell all your crypto. You just don't. You would say, guys, there's room for everything. Like Ray Dalio, he says gold's a reserve asset. Bitcoin specifically, he says speculative, but he owns both.
Go ahead.
Go ahead.
You're free.
You're free to have both. There's no problem here. There's no competition here. But to say you want to sell the gold to keep pushing up the price of Bitcoin, I mean, you're not saying that, but that's the quiet part.
Yeah, and Rafi Farber had a really good warning about this act that doing this can destroy the entire global monetary system literally overnight, is what he says. And there's no better way of killing the U.S. dollar. And if you think about hegemony and controlling, you know, you have this world reserve currency, the U.S. dollar. Why would you just let that go? I mean, I wouldn't. That's for sure.
And, you know, interestingly, by contrast, you know, we are constantly talking about gold being remonetized, and there's another bill being put forward. House Bill 306, which passed this week, is awaiting Governor Spencer Cox's signature. He's from Utah, which sets up an electronic platform to state vendors to take gold and silver.
Gives me shivers, Jeremy.
How about that? It builds on a 2011 legal tender law, which, by the way, it has always, you know, gold and silver as legal tender is built into the Constitution. The metal is stored in Utah, audited, a first in the nation transactional step. This is backed by Representative Ken Ivory, Senator Keith Grover, and Treasurer Marlo Oakes, who wants rainy day funds in metals. The timing's perfect, of course. Gold at 3,000, silver's climbing. Utah is betting on real money as we're seeing fiat currencies start to wobble here, as they've done for a long time. But listen, that is a very different trend, right? You're leveraging tech to be able to use the physical metal, and Utah is planting a flag for precious metals. That stands in stark contrast to trying to sell the metals to acquire Bitcoin. What are your thoughts?
This is participation that's going to drive the metals markets back into normalcy, back into the mindset of the average American. And this is very, very big, where in 1965, the U.S. Coinage Act removed silver from currency, backed by the military, of course. They did not want the silver to be in the coins. They much prefer to have it potentially in their weapons and weaponry in the military-industrial complex. And then the 71, you got rid of the gold standard. So they've introduced certificates and all these proxies. But now we're getting back to using gold and silver as a form of money. And it's amazing to see that it's metals-backed electronic payment platform. This is sort of in the step of direction of what the Treasury was talking about, using stable coins, utilizing gold and silver, a national-backed coin on the blockchain. So this is a huge step move. And I think we may have to get a new a payments terminal at the front there, Jeremy. We just got a new one from Moneris, so we're going to keep an eye out for this new payment system. But it reminds me of a post that I saw this week where it came from Make Gold Great Again. He posted, gold-backed money. Could be the most confusing term in financial history. Gold is money. Calling paper money imbues an illusion of value to the paper. It confuses 99% of people, allowing abuse. We should say gold-backed paper if we ever, again, back notes with gold. But in this case, we're going to have a metals-backed payments platform, and my hat's off to them.
Yeah, I think, there's a couple things there. First, 1-877-8-SILVER, website, guildhallwealth.com. We're talking physical precious metals. We all make the mistake. It's the mistake of how you use your words, right? What do you have in the bank? You say, I've got money in the bank. Well, what do you have? cash? No, they don't even cash. You've got ones and zeros and faith that the government will give you back the money. By the way, Jerry, we often talk about the bank bail-ins, right? Want to know what governor of the Bank of Canada put those into place?
Who?
I'll give you one guess, buddy.
Who it was?
Yeah.
Oh, Mr. Destruction, Mr. Carnage, Mr. Carney.
Yeah, that's right. When we've talked about the bail-in clauses that was put in place, well, Mark Carney was the governor of the Bank of Canada. So, have a wonder about that. That's when you think about it, whether it's something to really worry about or not, the fact is that could be potentially destructive, right?
Jeremy, it really hit me the other day. I know the news came out that he became, quote unquote, prime minister last week, but it really dawned on me this week that we have a central banker as a prime minister.
Yeah, like Mario Draghi.
Like Mario, like Super Mario. And this is the most important time for Canadians to now convert your currencies, build your wealth in ounces, because the destruction of the Canadian dollar is underway.
Oh, yeah.
And this is just going to continue to roil our finances. The deficit spending is just going to ramp up. And, we just got to keep an eye on this guy.
So getting back to the definition of words, right? So
Right.
You don't have money in the bank. You have a faith-based system. And at best, you have a currency. And a currency is a unit of exchange. But money, by definition, has to be a store of value. And you cannot say that the Canadian currency is a store of value. The fact that you put it into high interest savings accounts that are losing to inflation demonstrates the point and tells you everything you need to know.
Yes.
So we know that gold is money because it secures wealth. It's up 700% in the last 20 years. It's completely doing its job. Now, the question is, Jerry, and I know we've got just a couple minutes here, but you hear this so often, and I want you to answer this for people who ask this question. Is gold too high? Is it already too high? Am I too late?
A very good question. I got that question maybe about 5 or 6 times. And we have to use the the gauges that we use, which would be the silver to gold ratio, which is what we use to determine which one I should go with. If you already have precious metals, use this because it'll tell you which one is undervalued. And right now, despite gold hitting all-time highs, we're still at a very high level of 90-to-1 silver to gold ratio, which means the precious metal sector has not entered into a bull market yet. The bull market begins when we start seeing that ratio head down into the 70s, into the 60s, the 50s. And remember, this is the time where you accumulate silver and try to get, that undervalued metal. 90-to-1 means I need 90 ounces of silver to get just 1 ounce of gold. This is the time to load it up. Anything above that is back up the truck, load up the silver, try to get your hands on 2,000 ounces of silver, because as we are entering in a stagflationary period, this is the 1970s again, folks. What happened during the 70s? Silver and gold had an epic run. We haven't even started yet. So this is not just wealth protection. This is positioning your wealth, your portfolio for what's to come. And we're going to see multiple times higher in silver markets. Try to get your hands on it right now, because 2,000 ounces back in 1980, at the end of the 70s, at the end of that decade, all it took was 2,000 ounces to buy a house, right? When average home today in Toronto is about 1.3 million, depending on where you look, average, which would suggest that you need 2,000 ounces. That would be $500 an ounce silver. Would be 950,000 US converted into our week loonie at 1.4. That's about $1.3 million for your Canadian house in Toronto. You don't have to move all the way up north, even though we love Iqaluit and Nunavut. Hats off to you guys. What's up?
That's a big commute.
It's a big commute.
So, look, you bring up a point. It's about the ounces and how many ounces it should take to buy stuff. And when you look at things like the Dow, at the peak of bull markets, you normally see the Dow trading at a 1-to-1 ratio. We're currently at a 14-to-1 ratio. You need 14 ounces of gold to buy the Dow. In 2011, we got down to 4-to-1. As you said, silver to house ratio, you could do the same, gold to house ratio. Should you need 500, 600 ounces of gold to buy a house? If it's a house in a really nice neighborhood, maybe you need thousands of ounces. It should only take a few hundred ounces to buy a house. These sorts of things. There's how much gold you should have versus foreign foreign holders of debt, right? There's all these sorts of ratios. You know, the debt, 36 trillion in the United States. How much cash is out there? How much gold to cash ratio should you have? And when you start to look at all of those sorts of numbers, you can start to see where gold needs to head. And it starts to become less about the price and more about the actual ounces. So at 4,000, we're nowhere close. Again, we're at 14 to 1 on the Dow. You need hundreds and hundreds of ounces to buy a house. We could go through several more of those ratios. Maybe we'll do that right after the break. We'll throw some more of those ratios just to demonstrate. And then the big one, as you said, Jerry, 90 to 1 gold to silver. That is absolutely ridiculous. When the historic 16 to 1 and out of the ground, you're talking 8 to 1. Silver could not be more undervalued right now. And yet, they're shorting the crap out of the PSLV, so stick with us. We'll get into that subject coming up next. The number, 18778 Silver, the website, guildhallwealth.com. So, Jerry, just over the break, it just plugged into Grok some of these ratios that we could present here because we said, oh, look, there's a bunch. So, have you heard of the gold to S&P ratio? I always talk about the gold to Dow ratio, but there's gold to S&P. So where it is now, 3,000, S&P's at 55. That makes a current ratio of 0.55, where it should be. In 1980, it was at 7. Long story short, the peak, if you were to go to a moderate norm, you'd see a 2 to 1 ratio, and that would put gold somewhere in the 11,000 range, anywhere from 55 to 11,000. The foreign held treasuries, that's a good one. In 1989, it was 23%. In 1980, it peaked out at 100%. And basically what that means is based on where it should go now, if it were to revert to 23%, you'd be looking at $7,700 on gold. So just looking at two other ones besides real estate, Dow gold ratio, and silver gold ratio, you can start to get to numbers. And I think the bottom line takeaway from this is just these ratios are guidelines. You can start to say, here's the price, where's the ratios? Are the ratios coming down? Which ones do you like to use as a barometer to say, I can buy more shares of the Dow now? Like Peter Schiff looks at the Bitcoin gold ratio too, right? There's those sorts of things. But it gives you a sense of, am I getting a maximum purchasing power for my gold? Am I getting close to that? Exactly. What's the historic versus where we are now? And then that helps you to be able to say, well, where are we? And so with clients, we can get into those numbers a little bit further. Jerry, let's get to this PSLV thing, and then we'll get to the Comex. So one of the big things we saw this week is that we saw that the PSLV, the Sprott Physical Silver Trust, was being shorted, and it was very odd. What is going on here? Why is it being shorted like crazy? And everyone on X was started to jump in and figure out what was going on. But again, they saw massive shorting this week, and the question is, theory number one, is it just shorts are betting that the silver rally has peaked, that the price of silver should be falling, and they're betting that it's going to dump here? Or, theory number two, they're trying to block physical silver ETF, the trust, from buying more product. Okay? Now, obviously you're going to ask me, I believe that it's the latter, and I'll tell you why. About a month ago, Chris Marcus on Arcadia Economics did an interview with Rick Rule, who was managing the PSLV in 2021 when we had the silver squeeze. And they really dug into what was going on, what it was like. And Rick Rule was saying that there was so much demand that they were going around to the major silver exchanges in North America and clearing them out.
Just getting it all.
Taking it all. Clearing out Chicago, clearing out Montreal, clearing out there was so much buying in that ETF, and they were acquiring so much physical product that they were reaching their absolute limit. And it turns out that when you short the PSLV, it prevents, because of pricing arbitrage sort of thing, it actually prevents PSLV from being able to buy more product. So I call block and tackle.
Block and tackle. Yeah.
I think what's happening is this is not about trying to short the market. It's about trying to block an entity that could drive the price massively higher.
Mm-hmm.
PSLV acquiring physical silver in a moment in time where there's not a lot of product available, it's all being bought up by the Treasury or brought into North America for the Treasury, is absolutely huge. And it would break the market. Now, here is the kicker. Every single PSLV share that anybody acquires is set for auto lend, is set up to auto lend, meaning it is only the only way that these people, these entities can short the PSLV is because you inadvertently, unwittingly,
unknowingly
allowed it to happen as an investor. Now, you have to go in, you have to call your broker, and you have to say, no, I do not want this allowed.
Check that box.
Yes.
Exactly.
Yes. You have to make sure that you don't allow them to, that you opt out of the margin side of it, of letting them borrow. Okay? That's number one. Now, if you had physical gold and silver in your registered account, that would never, ever happen. No one can touch your physical gold and silver in a registered account. And I have no problem with Sprott. No beef here. I think it's fantastic. I hope they figure out this short situation and buy up a lot of silver and drive the price up. We are all on the same team here.
Mm-hmm.
But when you're talking about making sure your product is unencumbered, owning it physically, allocated, segregated, you have the serial numbers, it's your itemized inventory report, that's the way to go. Jerry, what did you make? Did you find it confusing when you heard about this move by these entities to short this?
Yeah, because the headline was the short sale volume explodes to new all-time highs, half the day's volume. Question is what does short sold mean? It's when you can borrow the shares and then you sell them because you're expecting the price to drop, and then later you got to buy it back. So that suggests that the first theory that you outlined was, okay, they're expecting the price to dump, but we're looking at the demand coming into the Comex right now. 678 metric tons of silver entered the Comex in the past 6 days. Silver surged to a 5-month peak already, $34 an ounce, hitting a 5-month high over the past week. Obviously, this is huge demand. I don't see metals dropping for any reason. Further, you have stagflationary worries now that the inflation is now transitory. They want a rate cut. And we have to remember, silver gains an average of 413% during the last 3 Fed rate cut cycles. So I think we obliterated theory number 1, and that you proved that theory 2 is that it's a block and tackle. They have to ensure. Who's they? Well, we know the Comex is feeding into the mint, and the mint is either preparing the silver for either us, retail market, probably not. I think that's
I still think that.
Exceeding demand, though. The year over year, I mean, we do have a lot of, we are an end user, but we're not the biggest user. We know the military is. It's a national security issue. It's a critical mineral for the United States, and the United States Treasury needs that silver.
Again, so the bottom line here is there is major shorting on the PSLV. It's gumming up their gears. It's making it so that they cannot acquire additional product, or making it very difficult. If you want to tip the scales, you want to lock down your shares and make sure that they cannot do that. Okay, it's to your own, profitability to be able to do that. Coming up in the next segment, we're seeing that the Comex has gotten rid of certain gold and silver contracts. Are they tidying up, or is it a cover-up? We'll get into that in the next segment. The number 18778-SILVER, the website, guildhallwealth.com. The market's moving. Gold cracked $3,000 an ounce. The psychology of the market's changing. People believe. Silver's cracked $34 again. We are getting close to making that run up into the high 30s, and I truly believe, Jerry, once we break those high 30 numbers like 37, 50, 38, the idea that we can break 40 is there. And I know, step by step here, you get to $40 silver, it's inevitable in people's minds that we're cracking 50. And at 50, we're in a whole new territory of price discovery. And so when you see the gold to silver ratio of silver maintaining 90-1 as gold breaks 3,000, you're saying to yourself, this is crazy that it's not taking off. Now, look at the reasons why. They're trying. We see there's a massive amount of import from London. We're seeing a shortage. Why else, in our opinion, would you be shorting the PSLV if to stop them from buying, right? The block and tackle of we need to stop people from buying this.
Yes.
Now, we also have something very curious this past week in the Comex. They axed gold and silver contracts. Very quietly, several gold and silver contracts this week, they pulled the plug on. They delisted gold kilo futures, London spot gold futures, London silver spot futures, and also, this to me was a big one, they cleared out the OTC London gold forwards.
Mm-hmm.
Like, wasn't that a mechanism to keep pushing the physical exchange later? It was like, we'll just keep rolling these over.
Yeah.
There was a great video out by Gold Core. Okay, she made a great analogy. She said this is equivalent to a really, really busy restaurant, crazy busy restaurant, and the manager decides to shuffle the menu in the middle.
Yeah.
It's very fishy. The timing of this is fishy. The official line is that there's no open interest, nobody's trading them, so we're just going to clean up, a little tidy up and no longer offer it. But come on, guys, this is the Real Money Show. None of us believe the official line. We're going to look deeper than that, and to us, it just signals we don't have that product. We can't offer that. We need to put all of our efforts into this other product. It is all hands on deck. Right? It is code red here. We need to get this physical product, and they're making these moves. Would you agree or disagree, Gary?
Well, they are making those moves, and we already know it's entities, institutions, exchanges fighting for metal, fighting for ounces. Leased over and over again. How many times? When you have ratios on silver being lent and rehypothecated 400-1, 400 paper fictitious ounces in existence, which is artificial supply to suppress prices. You can't artificially create a house to keep the housing market down, but they did that in the metals market. That's how important the precious metals is right now, and it's an alert to me that it's a signal that what happened a few years ago with the Bail-in Clause Act in Canada and the law, and you have the freezing of bank accounts. We realized really quickly that they had to. Chrystia Freeland had to flip that so quickly because people were taking the money out of a fractional reserve banking system. That fractional reserve banking system, it works by just keeping a fraction of what it loans out. And that's exactly what is going on in the Comex and in the LBMA. They've been holding a fraction probably of other entities' bullion. And when you have other people's bullion on your balance sheet, guess what? You're entitled to money. You can get some loans. Gold is the collateral. It's tier 1 capital, and that's why the U.S. is fighting for it, because the U.S. dollar is at stake, and they have to deal. As Ray Dalio said, you got to deal with $37 trillion in debt.
You brought up a good point. Let's put it all together here. Basel III rules are coming into play. That means there's going to be less leverage allowed in the market. You have an entity, most likely the Treasury, looking to acquire or bring back physical gold. And by the way, I think Vince Lancy just did an article that they may have been doing this as well on behalf of Argentina. They may be bringing in product for other countries. How about that?
Wow.
So bottom line, we know a lot of product is being brought in. They're closing out those accounts. They're saying, no deal. We don't like the setup of this anymore. What they're saying is, I'm taking my bat, I'm taking my ball, and I'm going home. I want it physically allocated. We have that. We have the Comex saying, well, we're going to cancel these particular contracts because there's no demand for them. And you're sitting there saying, well, that flies in the face of the fact that there's massive physical demand right now. And then you see the shorting of a well-liked, well-trusted PSLV, Sprott Physical Trust, And as you've discovered on the show today, it's most likely to stop more buying of the physical product, not just trying to source it from somewhere, but to also prevent others from buying it. We are so on the precipice here of a massive, massive breakout in silver. While I am always tempered in my expectations, and I'm not sitting here saying that I believe gold will go to $50 this year, the setup looks really good. Yes, silver, thank you. The setup looks really, really good for something cracking here, and this market just, the game opening up completely for gold and silver. Final thoughts, Jerry?
Well, back to participation. We just have to remember the metrics now. When you look at the $200 trillion in places you can put your money, whether it be into real estate, bonds, treasury, all that paper sloshing around, that's over 200 trillion globally. And when you have a finite amount of silver, and when they're trying to quell that demand, that's what's happening, because just 1% of our population own gold, and even less in silver. But just 1.5% of all that money sloshing around, $200 trillion, if just 1% of that jumped into the gold market, you will eliminate all investable gold, and you will eliminate, with as a fraction of the 1%, into silver. Forget about it. Silver is gone. Silver is going through the roof. This is the epic short squeeze that we've been waiting for. This is the real short squeeze. So for every single ounce you are acquiring, you're going to be diversifying yourself. Oxford Economics recommends putting 6% of your investment portfolio into silver. The yellow metal, the white metal, they're there for your portfolio and for your future.
The number, 1-877-8-SILVER, and the website, guildhallwealth.com. Guildhall will help you acquire physical gold and silver. We can help you store that physical gold and silver in your own sub-account, held at Brinks, allocated, segregated. Go visit your product, take delivery anytime. Or store it in a registered account, physical, allocated, segregated. You get your serial numbers. It's the best way to go. I still love that. It's such a great, unique investment and vehicle to be able to hold physical gold in your account. If you've missed a show, catch us on YouTube, catch us on Rumble, follow us on X. Thank you so much for joining us this week on The Real Money Show, and we can't wait to speak to you next week. You've been listening to our show on AM 770 Calgary and AM 640 Toronto. We'll speak to you next week.